Hi, everyone. It's Dr. Danny, the multifamily MD, and I am excited to talk to you guys today about a property that we just looked at a few days ago down in St. Pete that I am really excited about. And so, my name's Dr. Danny Firth. I am a full-time family medicine physician. I practice as a hospitalist, and I work with Chavis Capital as part of their investor relations, also do a lot of the underwriting. And so what I wanted to talk about today was a 35 unit apartment that we are looking at in St. Petersburg, Florida. And it's a beautiful day down here. I'm in Safety Harbor, Florida. So I decided to shoot this video outside. So I'm going to start sharing my screen, and I'm going to bring up PowerPoint, and we're going to talk about this property. All right, so this is it. It's called Uptown Suites. It is in downtown, excuse me, it's in historic Northeast St. Petersburg, Florida. So it's about a mile away from downtown St. Pete. If you guys are familiar with it, St. Petersburg, it's about a mile away from the pier, right in historic Northeast. So it's a great neighborhood, and we'll keep going. So this is the picture of the outside, and this is a 35 unit building. It's currently being run as a hotel, so they're doing it essentially as an Airbnb, booking it through that or Expedia or bookings.com. Mostly studios, 29 studios, 2 1-bedrooms and 4 2-bedrooms. And, the thing about this property is that the major work has already been done. So this property, as I found out when we toured it from my partner, Brian Chavis, um, is that this property used to be really a scary place. And they were running it as an extended stay and lots of drug dealers. And the new owners bought this a few years ago, kicked everyone out, totally redid it, repainted it, and it's super clean. And so there's not going to be a ton of heavy lifting. The work that we're going to do that I'll get into in a minute is more going to be about, minor upgrades that have a pretty short payback period so that we can increase the rents. And, the part about this is that the price per unit on this is only 125,000. So, depending on what part of the country you're from, that may still seem high, but in Tampa and the greater area around here in Florida, 125 per unit is really good. So right now it's being run as a hotel, but our plan is to slowly transition it to long-term rentals, to help with disposition. All right. So, as I mentioned, this is just a little summary about how many units it is. I already told you about where it is. And the the cash on cash that we're going to be able to make, actually 6.5%. I need to update that because I redid the numbers and it's more going to be like 8.5%. I must have missed that. So here it is. It is Uptown Suites. This is the big star right here. And here, if you've been down to St. Pete lately, they built a new pier. Well, not that new, maybe 2 years old now. But, you're not probably going to walk there, but you could certainly ride your bike, or, drive. But it's, pretty much right where you want to be. So great place. And, our plan here is improve, basically make targeted upgrades to this property. So this is very similar to what Brian Chavis, who is started Chavis Capital, and this has been what he's been doing his whole career. This is essentially identical to what he did with another property called Park Plaza in St. Petersburg. Is he took a motel and that had small studios, essentially almost all small studios, just exactly like this. And he made incremental targeted upgrades to be able to push those rents to at the time he sold it uh, close to a year ago now, he was topping out at 1,500 a month for, you know, a 350, 400 square feet studio. So that's what we're talking about doing is putting in these amenities, you know, based on the psychographics and the demographics of the prospect tenant. Um, and you know, not breaking the bank to do it. We're talking about, you know, a couple thousand per unit, um, you know, and kind of slowly making those transitions as we move it away from being a hotel into a long-term rental. And then the other thing is, you know, operational efficiency is basically a core principle of Chavis Capital. All of our management is in-house, and so operational efficiency is just built into what we do. So the purchase price is 4,375,000. So that it breaks down to 125,000 a unit. We are currently looking to raise 2.5 million, and we're basing that off of the need for capital expenditures for these upgrades. And that also we plan on doing this as a pretty low leverage deal. So, you know, the days of putting 20% down now that interest rates are, you know, 6 to 8% are behind us. And, you know, that may seem like a negative, but what it does is it forces you to find deals that work and have good cash flow, because you can't just rely on appreciation like you used to when you know, the markets are just going crazy. The other thing it does as an investor is it lowers your risk. So if we're putting 50% down, you know, we are not going to be not calling you up in 6 months for a capital call, just because it's you're going to cash flow when you're putting 50% down. And you know, like I said, that includes about 2,500 uh per unit in capital expenditures, so the upgrades. And then the plan for this is either to refinance it or sell it in 3 to 5 years. Uh, and you know, that gives us enough time to stabilize it, transition it to long-term rentals, and then find, you know, someone else to buy it, or potentially to refinance it, you know, get you back half of your capital and then keep the rest, you know, making you money. Um, but that would be a decision we'd make, you know, down the road, depending on market conditions. All right, so here is the part that is everyone's favorite part. So, and before I, you know, get into this, I just want to make a disclaimer. You know, when you run these kind of numbers, you have to make a lot of assumptions. None of us have a crystal ball. So I just want to tell you, these are, you know, my best kind of predictions based on, you know, what I expect rents to be. And I was pretty conservative. So, you know, I chose $1,200 as the initial rent for the studios, which, as you'll see once I get into the comparables, that's, you know, basically the 25th percentile of current rates. So it's below the median, it's below the average. And I also, you know, did this based on what I'm pretty sure our loan rate is going to be, which is 7%. We're still negotiating that. But that being said, you know, whenever you're looking at these, no matter, you know, what the deal is, you can finesse these numbers to look however you want. So, you know, what you really want to look at is, you know, do you trust the operators, and do they have a track record? Because you can plug in, you know, everyone can be a spreadsheet jockey and plug in numbers and, you know, get you a 3x return in 2 years. But is it realistic? Can you really get there? Like, you know, where are those numbers coming from? And have you done this before? So anyway, that being said, I was pretty conservative. And so this is my projected 5-year return. So the average cash on cash is going to be 11%. That doesn't mean you're going to make 11% year one. It means the average, including the disposition. You expect the investor multiplier to be about 2.45x. So that means if you put in $1, you're going to get back $2.45. You put in 100,000 at the end of 5 years, you should make a total of 245,000 about. And then the IRR, for those of you who know what IRR is, it's a measure of the efficiency of your return. So how quickly are we getting your money back is 22%. And so 22% is good. If you look at, you know, industry wide, I believe the normal range that I've read is around 18% for multifamily, depending on where it is. If you're taking a big risk, you might get a little higher IRR. If you're not taking as much risk, you're going to get a little lower, but 22% is pretty good. And so the investor returns, so a preferred return means we're going to pay this out before we get paid. So a 5% preferred return means that if you're going to get paid 5% of whatever you invested, typically on a monthly or sometimes quarterly basis, depending on how we structure it. And so that is going to be, and then after we hit 5% returns, that's when we're going to start splitting the money. And so after we make 5% is when the profits from that point on get split 70% back to the investor and then 30% back to Chavis Capital. And so what this does with this kind of structure, if you're not familiar with it, is that it incentivizes us to run this property well and make more money. Because if we don't make at least 5%, we don't make anything. And so we're trying to, make as much as we can so that everybody makes more money. The other thing I will say is that the 70-30 return is based on putting up anywhere from 25,000, which is our minimum, up to 249,000. If you put in 250,000 or more, that split gets a little better in your favor. And that's, obviously for us, if we have less investors, it's just less paperwork and it's easier. So if you're willing to put up 250,000, this split goes from 70% to 80%. So it becomes an 80-20 split. All right. So, and then down here, what you'll see is a sample return. So pretend you put up 100,000. If you put up 50,000, just cut all these numbers in half, or 25,000, cut them all by a quarter. But we anticipate you would make 8.66% year one. So 8,665. Year two, it goes up a little bit. Year three. And the reason this goes up is that rents are going up, for one. Also, we are paying down the principal on the loan, so that so we have more equity in the property. And then year five, it goes up to 11.54. And then this is pretending that we're selling it in year five. And so you get back your 100,000, and then 95,352 is your percentage of the profit from the sale. So this one is the total project equity. And I do need to update my slide because we readjusted how much we are going to put down for our loan to value. So this should actually be 2.5 million. There is a 1% acquisition fee that covers all of our costs for acquiring this property, doing the due diligence, paying all the for all the inspections. And then there will be a 5% property management fee. And then at the end of it, there's a disposition fee of 1%. And then this is the distributions. This is what I was telling you about earlier. It's a 5% preferred return, 70-30 split, and anything above 5%. And then if you invest 250,000 or more, that's when we split it to 80-20. And so it's even more in your favor. So after 5%, anything above that, you keep 80% and we keep 20%. All right. So these are just some of the kind of behind the scenes numbers. This is the price. This is some of our, what we're expecting it to cost for due diligence and closing costs. This is our construction budget. And then NOI is how much we expect to make each year in profit after, all the expenses are paid. So this, it goes up every year as you would expect. And at the end of year 5, we think it's going to be about 2,100,000. And then this is what I was saying, that you end up paying off the principal and interest every year. And we anticipate a sale price of around 8 million. Obviously, this is a guess. This is based on a cap rate of 6%. You know, if you guys have been in this industry for a little while, you will know that cap rates not that long ago, about 1 year ago, were around 4 to 5%. So that would make the sale price go way up. Cap rates are influenced by a lot, but one of the big things determining them is interest rates. So right now, interest rates are higher, so cap rates tend to be higher. But if you're not familiar with cap rates, um, you know, you probably want to watch a separate video on it. But basically, what it comes down to is the lower the cap rate, the higher the sale price. The higher the cap rate, the lower the sale price. And then this was just cost of sale. All right, so that's kind of how we got to the numbers. So now here's a little bit more about my assumptions. So this is a summary of the local rents that are, I just looked up about, a week ago in St. Pete. And this is how much 1 and 2 bedrooms are renting for currently. So the average rent is 1570, and then the median is 1539, and then the range is 1220 to 1920. So obviously the 1920s are your brand new Class A properties that have, a lot of fancy amenities. But the thing is, our property has a nice pool, and it has a great location. But they are studios, and so they're a little smaller than typical 1 bedroom. So that's why I said I started our rents at about 1,200, and then they go up, a little bit from there yearly, as rents tend to almost always go up every year. And then 2 bedrooms, there are 4 2 bedrooms. Again, average rent 2,383, median 2,400, and then there's quite a big spread. I picked 2,000 to be conservative. And again, those get escalated up as time goes on as well. And then here's where those numbers came from that I was just showing you. These are the specific apartments that are near to that one. This is the distance. This one's, these are all less than a mile away. So you can trust that this is pretty accurate. Again, the square footage is a little bigger, 450. Our studios are 350. But, as I mentioned Park Plaza earlier, those studios were, they were about 350 square feet as well. And Brian had no problem pushing those to 1,500 based on the changes he made. And then here's the 2 bedrooms, same thing. Prices are pretty high for 2 bedrooms. And now here's some photos. And, most of this is one of the studios that has a little kitchenette. Some of these, this one does not. Some of these do have little hot plates. I think that might be it actually up there. But what we're going to be doing as part of the renovation budget is we're going to be putting in little kitchenettes. So these are going to be, pretty small stoves, but we're going to slowly turn these into, full on apartments, not just hotel rooms is what they are now. But they are very clean. They put in the luxury vinyl plank that looks kind of like wood flooring. It's a great flooring, and it holds up well to a lot of abuse. And so, like I said, I just walked these a few days ago, and they really did a great job. I mean, the only thing we're going to do is some upgrades to some of the fixtures that we know that the prospect tenants are interested in. These bathroom vanities, we're going to put in something a little nicer. But overall, these rooms are very clean. It's going to be minor upgrades. This is the 1 bedroom, again, very similar to the 2 bedroom, but a little bit bigger. This one does have a little stove, so that's going to be similar to what we're going to be putting in the studios that do not have those. And then here's the 2 bedrooms, and the 2 bedrooms are actually pretty spacious, and they have more of a normal kitchen feel. They are all 1 bathrooms. The fan is pretty old school looking fans. So we know that the prospect tenants, especially, near downtown, They want the little fancier, more modern fans, especially this one. This one looks like it was in my grandmother's house. So these were some of the comps, and this is basically to show you that the price per unit, depending on the location and the size, is typically significantly higher than 125,000. So uh, this one sold for 240,000 a unit. This one sold for 217. Um, so, and these ones are a little bit older. So the more recent ones are going to come down to earth a little bit more. But what you're still going to find is that the price per unit typically is at least 175,000. You can find some now for 150. The reason this one is cheaper is because it's being run as a hotel, and so you can't price it the same way you can price an apartment building. And here's some more comps. And then, this information is more just general information about downtown St. Pete. If you are not from around here, you may not be familiar, but St. Pete is a beautiful town. I live 20 minutes away. We go down to the pier. Our boys love it. It's a great place for families, also a great place for young professionals. And that's where we're going to be kind of gearing towards, because you're not typically going to move a young family into a studio apartment. But it's typically going to be the young professionals that are going to be our prospect tenants. But it's a great place. It's a growing town. There are tons of employers, and you know even if there is a recession, which nobody has a crystal ball, but the reason why you want to be in a core market like this is that when the recession hits and the tide goes out, you want to be somewhere that's relatively insulated, and core markets like this are relatively insulated. So that is why we're really excited about this particular property. So this just talks about all the new developments going up in downtown St. Pete, and how great St. Pete is. It's #2 fastest growing city. I read somewhere TripAdvisor rated it as like the #1 beach, St. Pete Beach, a couple years ago. So it's a great place. Um, and then there are lots of different employers. So another big thing when you're looking at properties is you want to find a place to invest where there are lots of different employers. You don't want to be in the town where there's one big employer, and then if they go under, then everybody moves. So that's not St. Pete. There is tons of employment. All right, so a little bit about Chavis Capital. So who are we? So Chavis Capital obviously started by Brian Chavis. If you're not familiar with Brian, Google him and you will find all kinds of stuff. But the short spiel on Brian is that he is the best-selling Simon and Schuster author of a book called Buy It, Rent It, Profit. And I read that book a few years ago. If you're familiar with Graham Stevens, he talks about that book. And what it is it's about the fundamentals of buying real estate, and and specifically buying rental properties and how to run them. And it's essentially an operations manual for how to do it. So he wrote that book. He wrote another book called The Landlord Entrepreneur. He is a coach, he is a consultant, he has bought and sold a lot of commercial property with a specific focus on multifamily. He's been in this business for 20 years. And and he's also a good friend. I've known Brian since 2019 now, and spent a lot of time with him, played golf with him, had drinks with him. And he is a solid, reliable guy, and he's built a great company. um, and I'm just really grateful to be part of it and to share it with you guys. So this basically just says that our one of our core beliefs is that we want to provide housing that's affordable and in core markets, and provide in-house property management to be able to really efficiently run these apartments and maximize, all of our efforts. So what you'll find with the majority of syndicators is that they do not run their own properties. They hire third-party property managers, which there's nothing wrong with that if you manage the property companies. And but it does create more expense. So, this is what Brian has done for his whole career. And this is one of our unique selling points, is that we do all this in-house, and that we have a team of people who know what they're doing, and we don't have to outsource anything. So this is just kind of walking you through, what our overarching goal is. Our overarching goal is to provide a safe and reliable passive income for accredited investors. And this is the 5 phases. If you've gone to any of his workshops or read his books, these are the 5 phases. And Brian can talk for literally hours about each phase. But the 5 phases of buying an apartment are acquisition, implementation, stabilization, growth, and exit. And then, and one of the things to think about is kind of a Stephen Covey-esque kind of idea, is that when you're looking at an apartment, you think about how are you going to exit. So you kind of, in his words, it's you begin with the end in mind. So we think about, how do we anticipate leaving this property? And this is such a great property, we may or may not leave it. We may refinance it and get you out your 50%, 60% of whatever you put in, and keep the rest making money. Or we may sell it and just take a lump sum. But that's kind of to be determined. So this is what I was talking about with in-house property management. You will also have this as a PDF. I know I'm going through it a little bit quickly, but this just kind of walks through, what you can expect from us, and how we kind of run our business. And these were just some of our competitive advantages. And I've already mentioned a lot of these, but I want to just emphasize the intimate knowledge of this area. So St. Pete is where Park Plaza was. It was almost an identical type of property, about 10 units smaller than this one, but it was the same kind of deal. And this is Brian right here. As I mentioned, he's won a lot of awards. He's got, I think, one of the only property management books that's in the Library of Congress. I don't know how you get a book in the Library of Congress, but somehow he did it. And, Brian's got a really touching story that I'm sure he'll share with you at some point, but he went through something that no one should have to go through. He basically almost died of a brain tumor and had a lot of trials. So think about what Job went through, and you'd be in the same general ballpark about what Brian went through, and came out of it on the other side. And this is our team. So this is Melvin. He is our lawyer. He helped us get all of our corporate structure set up. Larry is an accountant, and we like Larry because he is not just an accountant. He also owns real estate, so he gets it. He's going to be the one helping to make sure that you get paid. Nathan Johnson, he is a director of marketing. He helped us make all these beautiful slides and the website. He keeps everything running. Chad Musgrove is a great guy. He went to Columbia. He talks about real estate financing in ways that baffle me. But if you want him to, he can talk down to your level. But he is the one that we send everything to and say, hey, Chad, are these numbers going to work? Help us find a loan. And then he pokes holes in it and tells me, no, you should adjust this 2% this way and this that way. But great resource. Greg is our broker. He also helps us with our property management. Shane is a professional basketball player. He has a similar role to that I have in investor relations. And then Miss Karen Flowers, the whole thing would fall apart without her. She helps keep the wheels running and keep everybody where they're supposed to be and doing what they're supposed to be doing. And then this was Park Plaza. So this was the one that Brian just sold in 2022. So like I said, about a year ago. So this little arrow over here is about where the pier is. This is Park Plaza right here where the red arrow is. So Brian bought this in 2019 for 2.6 million. At that point, the average rents were $800. And then he sold it for 4.2 million when he had the rents up to 1,500. And in hindsight, Brian actually sold this at exactly the peak of the market. So I don't know how he did that, but he did. And so this was all done in cash. So unlevered IRR was 24%, cash on cash 9.25. Had he financed this deal, it would have been, these numbers would have been incredibly higher, but it was all done cash. And so he made a lot of money and knows what he's doing. That's the point of this slide. So if you are interested in investing in this property, you should, you can go to chaviscapitalre.com, or you can also, if you have this as a PDF, you can click on this link and it'll take you right to our investor portal where you can sign up. And when you sign up and do all this, you're not actually transferring any money. You're just making a commitment of how much that you would like to invest. Once everything is finalized, we're going to be calling you and saying, okay, we're ready for you to send the wire. But this is just a soft commitment. You can also set up a call with me, or if you want to email me or text me, my phone number is right down here. But that is, and I'm just going to show you what this looks like for a minute if my internet's still working. Like I said, I am outside, so it looks like my internet is not working. At least not working very fast. All right, so I'm going to stop sharing my screen. And I just want to close with saying thank you for your time. And again, we are really excited about this property. We have been looking for close to a year, and we've looked at a lot of deals, and this is honestly the best deal we've come across in the past year. We talked to the owner. We've toured the property, and this is a great deal, and we'd love for you to invest alongside with us. So thank you for your time. I look forward to talking to you. Feel free to reach out to me, and I will talk to you later. Again, this is Dr. Danny, the multifamily MD with Chavis Capital, and have a great rest of your day. Bye.